Have you ever wondered how to start investing in digital assets? Well, let's dive into the fascinating world of digital assets. Imagine a form of value like money or property, but existing solely in the digital realm. These are digital assets, and they include a variety of entities. You've probably heard of cryptocurrencies, such as Bitcoin and Ethereum, which are some of the most popular digital assets. But there are also digital tokens, unique digital representations of real-world assets. We're living in an era of rapid digitalization. More and more, our lives, businesses, and even economies are moving online. With this shift comes the rise of digital assets, presenting exciting investment opportunities. But remember, as with any investment, there are potential benefits and risks. Knowledge and understanding are key to navigating this digital landscape successfully. If you've ever been curious about investing in digital assets, this is the perfect video for you. Before delving into the investment process, it's crucial to understand what digital assets are. In the simplest of terms, digital assets are anything that exist in a binary format and come with the right to use. These assets include everything from your digital photos to the emails in your inbox. However, in the financial world, the term digital assets is mostly used to refer to cryptocurrencies like Bitcoin, Ethereum, and thousands of others. These cryptocurrencies are created using a technology called blockchain. Imagine blockchain as a digital ledger, where all transactions are recorded and visible to everyone within the network. This transparency makes it nearly impossible to tamper with the data, providing a layer of security and trust. Cryptocurrencies are the most popular form of digital assets, but they are not the only ones. There are also digital tokens, which can represent a wide range of assets or rights. For instance, you might have heard of non-fungible tokens, also known as NFTs. These are unique digital tokens that can represent ownership of a unique item or piece of content. Digital assets also include central bank digital currencies, or CBDCs, which are the digital form of a country's fiat currency. These are issued and regulated by the central bank of a country and represent a new wave of financial technology that combines the benefits of digital assets with the stability of traditional currencies. So why are these digital assets important? Well, they represent a new way to transfer, store, and trade value. They can be used for a variety of purposes, from buying goods and services to investing and storing wealth. Furthermore, they are decentralized, meaning they are not controlled by any single entity, like a bank or government. This gives individuals more control over their assets and opens up new possibilities for global trade and commerce. Now that you understand what digital assets are, you're ready to learn how to invest. Investing in digital assets can seem daunting, but it's a straightforward process once you know the steps. So let's break down these steps to make the process more approachable. First things first, you'll need a digital wallet. This is essentially your bank account for digital assets. There are various types of digital wallets out there, from online to offline and even hardware wallets. Each has its own pros and cons, so it's crucial to do your research and choose the one that best fits your needs. Once you have your digital wallet all set up, it's time to choose a digital asset exchange. Think of this as your digital marketplace, where you'll be buying and selling your digital assets. Again, there are numerous exchanges out there, each with its own unique features. Some are more user-friendly for beginners, while others offer more advanced trading options. Remember to consider factors like security, fees, and the range of digital assets available when choosing your exchange. Now, you're ready to buy your first digital asset. This is where the fun begins. But before you dive in, it's important to have a clear plan. Are you looking for a long-term investment, or are you interested in short-term trading? Do you want to invest in well-established digital assets like Bitcoin, or are you more interested in lesser-known, potentially high-growth options? Once you've decided, it's as simple as placing an order on your chosen exchange. You'll specify the amount of the digital asset you want to buy and the price you're willing to pay. Then, you wait for the order to be fulfilled. Once it's done, congratulations! You're now a digital asset investor. But remember, investing in digital assets isn't a one-time thing. It's an ongoing journey that requires regular monitoring and adjustments. Always stay informed about market trends and be ready to make changes as needed. Investing in digital assets is as easy as 1, 2, 3. So don't let the initial complexities deter you. With a bit of research and patience, you'll be well on your way to becoming a savvy digital asset investor. Building a balanced and diversified digital asset portfolio is key to successful investing. Let's dive right in. Diversification, the practice of spreading your investments across various types of assets, is as essential in the digital realm as it is in traditional investing. It's like the old saying goes, don't put all your eggs in one basket. By diversifying your digital asset portfolio, you're spreading the risk. If one asset underperforms, the others may offset the loss. But how do you go about selecting digital assets for your portfolio? Firstly, you need to do your homework. Researching the asset is fundamental. Get to know the team behind it, read their white paper, understand their vision. This can give you a good sense of the asset's credibility and potential for success. Secondly, understanding the use case of a digital asset is crucial. What problem does it aim to solve? How is it unique compared to other assets? A strong, clear use case can be a good indicator of an asset's potential for long-term value. Thirdly, consider the asset's potential for growth. Look at its historical performance, but don't get too caught up in past success. Instead, focus on its future prospects. Is there room for growth? Is it scalable? Does it have partnerships or endorsements that could drive its value up? Also, bear in mind it's not just about picking the right assets, but also about the right allocation. You should decide how much of your portfolio to allocate to each asset based on your risk tolerance and investment goals. Remember, investing in digital assets can be risky, but also rewarding. It's a dynamic, fast-paced world out there in the digital asset market. But with careful planning, thorough research, and strategic diversification, you can build a robust digital asset portfolio. A well-diversified digital asset portfolio can help you navigate the volatile digital asset market. So, take your time, make wise decisions, and let your digital asset portfolio be a beacon in the exciting but sometimes stormy sea of digital asset investing. Like any investment, digital assets come with their own set of risks. This statement rings true whether you're a seasoned investor or just getting your feet wet in the world of digital assets. The first risk that comes to mind is market volatility. Digital assets can experience extreme price fluctuations within short periods. One day you could be riding high on a wave of green, and the next you could be drowning in a sea of red. But don't let this deter you. Market volatility, while a risk, also presents opportunities for high returns. The key is to stay informed, keep a close eye on market trends, and make calculated decisions based on your risk tolerance. Next, let's talk about security risks. As digital assets exist in the virtual world, they are susceptible to cyber threats. Hackers are constantly on the prowl, looking to exploit weak security measures and steal digital assets. But again, there's no need to panic. You can mitigate these risks by employing robust security measures. Using secure wallets to store your digital assets is a good start. Wallets with strong encryption can ward off hacking attempts and keep your assets safe. Enabling two-factor authentication is another effective way to enhance security. This adds an extra layer of protection, requiring not just a password but also a second factor, usually a code sent to your mobile device, to access your digital assets. And lastly, remember the golden rule of investing. Only invest what you can afford to lose. It's easy to get carried away by the allure of high returns, but it's equally important to stay grounded in reality. Investing more than you can afford to lose not only exposes you to high financial risk, but it can also lead to stress and poor decision-making. So there you have it. Market volatility and security risks are two major concerns when investing in digital assets, but they can be managed with the right strategies and a level-headed approach. Risk management is an essential part of successful digital asset investing. And with these tips in mind, you're well on your way to navigating the digital asset landscape with confidence. Investing in digital assets can be an exciting journey, but it's important to be well informed. And that's what we aim to do in this video. We started with the basics, helping you understand what digital assets are, a new class of investments that exist purely in the digital realm. From there, we dove into how to get started with your investment journey, discussing the importance of choosing the right platform and knowing your investment goals. We also covered how to build a well-diversified digital asset portfolio. Remember, diversification is key in managing risk and achieving a balanced investment portfolio. Lastly, we touched on the risks involved in digital asset investing and how to manage them. It's essential to be aware of market volatility and protect your investments accordingly. With the right knowledge and strategy, you're now ready to start your digital asset investment journey.